Most traders fail because they follow fake strategies. Today I'm trading a real strategy. Stay with me. Perhaps you'll never trade the same again. For those of you who don't know me, I'm Rob. For those of you who do know me, I'm still Rob. It's Coffee with Rob. I've been doing this for 34 years, and it all boils down to this. Fear and FOMO destroys traders. Ladies and gentlemen, fellow traders, welcome. It's good to have you and the video again. Let's talk about these things that we need to know today with regards to fear and FOMO and the strategy that's going to make you the money. Let's talk about the strategies. Let's get on with it. Let's get going. Don't forget, guys, trading's risky. Most traders lose money. And if you don't like risk, you don't like losing money, guess what? Don't trade. Whatever you do, don't trade. Rather become a doctor, become a dentist, or one of those wonderful fine things. I'm not really sure which one you want to do. Let me move my picture out of the way so we can go and talk about all these trades. We can go and have a look at all these trades today and see where we are. Now, this morning, you guys would have thought, Rob, you're nuts. You're calling the US dollar ZAR long. Absolutely, yes. Look at that big red candle bouncing out, starting to go to the upside, starting to break that trend resistance. But what you guys might have noticed is this massive, huge head and shoulders here. Bit tricky there, eh? Head and shoulders, if that plays out, it's going down quite a long way. Thing is, fundamentally, how can the rand get so much stronger? Now, it's not to say it can never happen, but you never know. The whole point here is, I look at the fundamentals, and at the moment, the South African government's having a good old Barney, we call it a fight with Washington. And they're not getting along in the slightest. In fact, Washington is now planning to impose sanctions. I'm getting my words all twisted today. Impose sanctions on the government of South Africa with regards to their feelings on how the country is being run here and their racist policies and all the rest of it. So now what we're sitting with is a situation of will the rand get stronger? Now, if I look at that head and shoulders, I would say, well, if I was just looking at the chart, I'd be like, definitely that's going to get stronger, isn't it? It's gonna just go crashing down this way. But then when I look at the overall picture and I see that trend going there and I see that going up and I think about the fundamentals, the only thing that could cause this to go the other way is if the dollar was to weaken for some other phenomenal, strange, wonderful reason. So as we stand at the moment, I'm looking at the long trade. And I'm saying that if that breaks to the upside, gives us a closed green candle, we can take the long trade to the upside. For those who are cautious, you could wait for it to break the shoulder and break above that shoulder. That would be a fair way to look at it. But today I am going to talk about the one strategy that makes us money, that one strategy that you guys all need to trade. And we trade the three ways, and we'll discuss that. And we'll go into detail about the way we trade and how we trade, because that's important. It's really important. Now, I'm doing this video with my little video on the side. It should be out of the way, so that's normally the case. And we're going to go through the training process, and we're going to go into detail on all of this. For those that are not here, they can always come back to it. It's important to understand that you have to have one strategy, and one strategy will make you the money, one business plan. So let's talk about why most traders fail. Most traders fail because they're stuck in the never-ending cycle of doom. That cycle of doom where they keep going from system to system to system because they believe the charts are going to make them money. Now, I've told you guys a million times, the charts don't make you money. The charts are not where the money is. The money's in the strategy, the money's in the business plan. Now, if you were to go and start any business in the world, surely you would need a business plan. You wouldn't be going in and just saying, oh, I'm just going to go and click on this chart, and I'm just going to go and have a look at that candle, and I'm just going to go short there because it's a red candle and see what happens next. You don't know how much capital you need. You don't know how much profit you're going to make. You don't know anything. You're just jumping into the trade and saying, well, I'm just going to start trading today because Joe Soap said that I can drive a Porsche if I just start trading and I can turn $1,000 into millions and millions of dollars. But that's not how it works. That's just not how it works. It cannot work like that. How can you take any amount of money and double it in 12 months? Name one place you can take your money to and double it, whether it's $1,000, $100,000, $1 million, $10 million. Where are you going to take it and literally double it this year? In other words, turn $1,000 into $2,000 in 12 months. Now, I don't know of any place you can actually do that, even in the stock market, by the way. But people tell you that you can get into the stock market and within 12 months, you'll be able to turn $1,000 into hundreds of thousands of dollars, which always interests me. It always interests me why they think that that can be done, and that is possible. Theoretically, can be done. Practically, fear and FOMO will kick you out, and it'll stop you from doing that. So you've got to look at the situation that you're in and say, if I can't take $1,000 and turn it into $2,000 or turn it into $100,000 in 12 months, what am I going to do? So what a lot of people do is they get involved in funded accounts, and funded accounts are available. I've even got links in the description with funded accounts in them for those who want to get $100,000 to trade with, or maybe practice trading with that $100,000, and then you get a cut of the profits and you put that in your bank and so on. That's one way of doing it. Another way is there's a lot of guys out there that maybe they got retrenched or they got a pension or something like that, and they want to start trading with that. Now, the one thing you have to understand with trading is that you are going to lose. There are going to be losses in your trading. So you don't just win with trading. You don't take this trade and say, well, that's green. I'm going to go long here because it's the US dollars that Rob said it's going to go long, so we're going to go and buy it. And then it doesn't work out because 50% of the time you're going to lose your trades, perhaps even more than 50% of the time you're going to lose your trades. And the only way around that is to have a proper strategy. Now, the system is easy, and I'll show you guys the system. I've showed you guys the system a million times, and that is we trade three ways. We trade with the trend, we trade in a range, and then we trade on breakout or counter trade. Counter trend. So in other words, it counters this trend, green candle comes out, goes to the upside, or it breaks out from a level and it moves away. In other words, green candles above the resistance start moving away. That's a breakout. It's breaking out, it breaks down. Red candles below the support, breaks down, it's breaking down. Doesn't always work out. And often people will tell you, other traders will tell you, that if you want to trade breakouts, then you should wait for the retest. In other words, wait for it to come back, retest, and then take the trade. I'm one of those traders who doesn't do that. I don't wait for the retest. I'm actually quite risque, and I like to, if I see the green candle close or the red candle close, I'm in, I'm taking the trade, and off we go. If it retests and it works out, that's great. If it retests and it fails, then it heads to my stop loss. Either way, I'm on a 50-50, and I'm looking at a situation where I'm managing my risk. So the most important part of your strategy is simply to manage your risk. And this is where most traders go wrong. Most traders stop right here at the charts. The charts are where we're at. So we're on the charts, we look at the charts, and we put our little line in place, and we say, where are we going to put this line? And there's our line, there's our resistance, and we put our support in. Now we're trading price action. So we're all brilliant now. We're all trading price action. We've got the head and shoulders here. We're looking at that. We're looking at the bigger picture, and we're trading on the charts. This is where most traders go wrong. They stop right here, and they believe that the chart has to call the trade for them, and that the chart's going to give them a win rate, and that win rate is going to make them profitable. Now, the question about win rates and charts is this. If I win 10 trades in a row here with a win rate, but I only win $10 per trade, I've only won $100. And then the 10th, 11th trade, I lose $1,000 because I get all booked up in it, and I follow the trade down, and I dollar cost average, and I move my stop loss away, as all traders do. And then I find myself in a pickle, a rather big pickle to say the least, because now I'm $1,000 down, I'm only $100 up. In other words, I've lost $900 instead of making some money. But I got a win rate. I won 10 trades and I only lost one. So win rates don't make you money. Win rates are a fallacy, are something that people seem to dream about or think about, or, I don't know. People just have this thing that win rates will somehow make the money. If I win more trades than I lose, then surely I should win. But we haven't really worked out the strategy of how much we're losing. You've got to understand how much you're losing for that to work. So if I win more trades than I lose, and I know how much I'm losing, then yeah, that's great. That'll actually be fantastic. But if I don't know how much I'm losing, how can I possibly win? Because I could be losing gargantuan sums of money and winning tiny little sums on the wins, which is not really much good, is it? It is coffee with Rob, so. So let's take this into perspective and let's talk about this, because so many people don't get this. So many people don't understand this. And the important part is to understand that charts don't make you money. When I started trading, we used to draw charts with pens and pencils. Charts were not nice little computer things like this. How lovely is it to have these computer programs now where I can draw these fancy purple blocks, and I can draw these lines in, and I can draw resistance areas and support in with the click of a button, and it's all there for you on any trading software, whether it be this MT5, whether it be TradingView or CTrader or whatever trading program that you have. It honestly doesn't matter. Doesn't matter one way or the other. You get amazing trading tools that you can use. You get all sucked into the indicators. Number one, everybody wants to trade with indicators. Say there's a million indicators, for example, on TradingView. I think there's a million indicators here as well. If I was to look for indicators, I would find millions of indicators, which you don't need to use. The only indicator that's really important to most pros is RSI, Relative Strength Index. And I know that everybody wants to use all these other indicators, all the moving averages, all the Ichimokus, all the MACDs, and you name it, but not necessary. And then another important indicator that some people might like to use is the volume. People like to use the volume as well. You look at this trade, it's coming down. This is a supply and demand, so it's hit that area. There's a support here. It's broken through the support. Nasty candle pointing it back up. Go and download a little bit about candles. Candles can help you with direction. Candles can show you which direction things are going in sometimes. Just remember that candles are only valid for the next time period. Now, we trade on the 4-hour, and we swing trade, or we position trade. They call it swing trading now. I call it position trading. But it's much slower, much easier to trade with, and you don't have to get all hooked up into it. You don't have to sit and watch charts all day. You can relax, pop down the beach. You can come in the morning, take your trades, leave them, come back later. It's much easier to trade, and you can make them wider, but you do have to be patient. And patience is a big issue for traders as well. Traders don't have patience. So that's why they drop to the 5-minute charts, because they get bored and then they start trading on faster trading and then they lose all their money. You have to have patience. You have to learn to sit on your hands and wait for the trades to come to you. Then you have to leave the trades in place. Now, the nice thing about what you call swing trading and I call position trading is you can take your position, leave it, and come back to it later. Now, let's say you take this US dollar ZAR. There we have it. We've got a range. We've got the upper range. We've got the lower range. We know that it's broken through that trend resistance. It's giving us a green candle. That green candle closes. We take the trade. We target 1750. We put a stop loss at 1690. There you go. Bob's your uncle. That's how easy it is to take a trade. But now you have to manage that trade and you have to manage the strategy. The strategy is simple. And I give you the strategy in all the videos. And I'm going to give you the strategy simple here. Three-point business plan. It's not like 1,000 pages or anything. Business plan. Who would start a business without a business plan or a plan of some sort? So you get in and you say, I'm going to risk the same amount on every single trade. Now, why do we risk the same amount on every single trade? Because then you know exactly how much you're risking. And now you can plan to make more on your wins and lose less on your losses, because that's the plan. The plan is to lose less on your losses and make more on your wins. So if you have a $100,000 account, then simply you're risking $1,000 per trade, no matter what. How do you do that? Basically, you go into the trade, say, I want to put my stop loss down here at 1690. How many contracts can I take back up to 1715? and you work that out, say that's 0.05, whatever, you take that, and then you work out how much profit you can make, 1750. Is it more than the $1,000 I'm risking? Is it 2,000? Is it 1,500? That's good enough. And then you take the trade based on that. Then you simply manage the trade from there. Come back to it, check where it is it in profit, move your stop loss up into cost, the trade's costing you nothing. Understand this, every single time you take a trade, every single time you decide to take a trade, it's costing you the risk that you're putting in. In other words, if you're risking $1,000 per trade, every single trade you take costs $1,000. Until such time as you decide that it's not, and then you put the stop loss up to cost, then it's costing you nothing. Now suddenly it's a free trade. You can actually look at that as $1,000 win, because you actually should be writing that $1,000 off as soon as you take the trade. Knowing that you're trying to make a profit, you might get it back. What most traders make the mistake of doing is thinking, I'm going to make the profit first, not understanding that I've actually put risk on the table. You've actually put money on the table. You've put risk down. And that risk is now out there. You could lose it. So understand that that's how much the trade is costing you if it all goes pear-shaped. That's as simple as the strategy gets. There's no complicated issues around the strategy. It's incredibly simple. Keep it simple. Just keep it simple. And it'll be so much easier. And then you just trade with our simple price action system, which is resistance, support. So we've got our support areas that we put in place. We've got our resistance areas that we put in place. We've got our trends. And I've shown you guys this so many times. Once you know where your resistance is, once you know where your support is, it becomes so much easier to take your trades, because effectively, for example, you look at this trade, it's on support. You look at the trade, there's the resistance. The resistance is clearly pretty far away. And then you've got this trend, you put the trend in, and it's breaking through the trend, so it's breaking structure on the trend. It's bouncing off the support. It's so simple. I mean, you don't have to get complicated with these trades. You don't have to go over the top with these trades. That is my rant on the one strategy that you need to trade with. You don't need 500 different systems to trade with. You don't need to get caught up in that cycle of doom, watching millions of YouTube videos, going on hundreds of courses, looking for that magic pull. You know what? I don't have a magic pull in my pocket. No trader does. You know, the magic's not going to fall out the sky. You're not going to make millions of dollars out of nothing. Every time a system fails, there isn't a better one waiting for you around the corner. In fact, the more you take off your charts and the more simple you make it and the more you apply strategy to it, the more you'll start understanding the whole point. You see, the thing is, the aha moment came to me many years ago when many older traders turned around to me and said, Rob, you can't time the market. You can only make money with time in the market. And my reply to them was always, but I want to make money now. I need to make money now. I can't wait 30 years for it, which we are doing now. I mean, we've got the investment account, all disclosures there, you know, that is on the go. But, you know, at the time, I was only looking to trade and I was hoping to make the money today, this week, this month, not next year or 5 years' time or whatever. You want to have the fun now, not when you're old. So the whole point was, but you can't time the market. You can only have time in the market. If you try and time the market, you're going to lose. And then I realized that I had to find a system that was going to allow me to work in a market that cannot be timed, in a market that you cannot time, that you cannot decide, okay, it's going to definitely go up now or it's going to definitely go down. A market that's 50-50. How do you apply a strategy to that? How can you make money with that? And it all dawned on me that having time in the market is the same as working on a strategy that basically says make more on the winning trades, lose less on the losing trades, and you can take as many trades as you want, because odds on, that's what it's going to do. So yeah, that's where we are with it. Then any questions on the system? Well, pretty straightforward. We trade with a trend, we trade in the range, and we trade breakout trades. Simple as it gets. We wait for the candles to close, we go for it. I don't wait for break and retests. We just hit it and we just go. We just nail the trades. It's as easy as it gets. So that's my rant for today. Basically, you know, why, how, what, etc. It's charts can't predict the market and so on. So yeah, that was basically what I wanted to say. There's only one real day trading strategy. There's only one real day strategy, that day trading strategy or swing trading strategy or position trading strategy that you need, and that is risk management. There is no other amazing strategy. Hope that helps you guys. If there's any questions, do ask in the chat. Right. So Blue Mango's here, Elaine's here, Henny's here, and hello guys, welcome. Good to see you again. I've just gone off on a complete rant about how most traders don't have one strategy and they got 20 different strategies, and here we go. So now you have the whole thing. Once again, I've gone over the whole strategizing of trading, the whole point of trading, and where we stand, and why I go over it over and over and over again. I get a lot of flack for my policies on the 50-50, my policies on the way I trade. But you know, that's life. Not everybody's going to think the same way. Not everybody's going to have the same idea. It took me 10 years to figure it out before I realized that squiggly lines are not going to make me money. It took me a long time to get over the fact that you need stop loss and you need to manage a trade and you need to have capital to trade. It took me a seriously long time to work that out. Why? Because I'm human, like everyone else. We all like to believe that we're going to be part of that top 25% of the people that win. We're never going to be part of the 75% that lose, are we? And I mean, 34 years of this, going back to it, staying with it, trading it, took me 10 years to figure out that it's not the charts that make you money, that it's all about strategy. Funny thing is though, when I started, there wasn't all this computerized stuff. So for me, when I started, I should have realized immediately that it's not the charts that are going to make you money. But you see, they sucked me into trading by telling me that because the market goes up and down, that I would make money based on the fact that you don't just put money in and wait for it to get to the top. You must like buy it. And when it gets to the top, you must sell it. And when it gets to the bottom, you must buy it. And when it gets to the top, you must sell it. And that's what they sucked me into trading with. How stupid was I? Because I actually believed that. I actually believed that you can call the bottom of anything and call the top of anything and buy and sell stocks. I thought I was clever. I thought, well, this is true, because if you look at this chart, if I draw this chart, it goes up and down. So clearly, if I just buy at the bottom and sell at the top, I'll make money. That was the idea. Yeah. So many people still believe that's the idea. But I've yet to meet someone who can actually call the bottom or call the top of anything with 100% certainty. There is no certainty. The only way you can look at the top or bottom of things, and that's why pro traders use RSI so much, is you can look at it's overbought, it's oversold, and somewhere in that area, because I've got deep pockets, I'll sell or buy it because it's so overbought or so oversold. And somewhere down the line, it's going to turn and work in my favor. I took one of those trades yesterday. I did point it out on the Telegram channel, I do believe. I shorted silver based on the fact that it was overbought. That was the simple principle of my trade, which is not what I show you guys, which is not what I preach to you guys on a daily basis. It's not part of the strategy. It's not part of our system. In fact, it's not part of anything here. But I did it anyway, and because it's a deep pocket syndrome, it can go into a loss, draw down, and it'll come back and it'll make you a profit. And that is basically where I was with it. I did put a stop loss on it at about 60. It never reached that, and it's still going. So yeah, guys, no, it's much of a muchness. You just have to follow your own plan and work with a plan. You know, it's like I say in trading, is there's so many different traders out there showing people how to trade these products. Everybody's got their own idea. Nobody's wrong. Everybody's got their own idea. Nobody's wrong. Everybody's got a system in place that might work for you. The charting system really doesn't matter. Whatever charting system you want to use that you feel comfortable with, that suits you, go for it. What I always say is pick out the best from what works best for you, because all the charting systems work. It's just basically where do you feel comfortable taking your trades? What works best for you? Would you like a moving average crossover system? Would you like to work with Fibonacci? Do you just want to work with the RSI? Do you want to work with price action? So many different ways that you can work. What works best for you? What makes you most comfortable? Do you want to drag more than one thing into your trading? There are some of you here that will only trade with having volume on the charts, and you'll trade your system, but you must have volume. For example, some of you might want to trade with stochastic, MACD, whatever the case. There's no issue with that. Of course, you can trade with any system whatsoever on the markets. You know what? They all work. Every single one of these systems work. The point is, apply the strategy to the system. So in other words, you've chosen your system, the system that's going to work for you. You've put all the lines in place that you want to work with. Maybe some of you won't even want to put lines on the chart. You just work with a blank chart. That's great. No problem. What you do have to do, though, is apply that strategy. That strategy is important. And the strategy is just basically lose less on your losses, make more on your wins. If you were to take all of these trades here, there's 1, 2, 3, 4, 8, 12, okay? So let's take all of these trades one by one, and you can say long, short, long, short, long, short, long, short. Doesn't matter which way they're going. If you take all of those trades and you leave them in the market, out of the 12, you should at least win 5 of them just by pure luck. And the rest you might lose. But if you manage the losses to a small amount and you manage the wins to a larger amount, you should overall end up in a profit at the end of the day, somewhere down the line. When that goes pear-shaped, of course, is when there's a big crash, or something goes insanely wrong, and everything comes tumbling down. Then, of course, you know, then you're going to lose all 10 trades, which is why we don't risk 10% per trade on leverage trading, because then you're going to lose your account on 10 trades. You only want to lose like 10% of your account. Yeah, Blue Mango says, "Rob, I hear you, and with that win rate doesn't make you money. However, would you agree that with a win rate coupled with a fixed RR can be important info?" You see, for me, Blue Mango, a win rate I ignore completely, simply based on the fact that nobody does that. Okay, nobody takes the strategy into account. They just say, "I've got a win rate." Okay. It would be great. It would be great to have a good win rate mixed in with a strategy of losing less and winning more. Of course, if you do have a good win rate on that, then you're going to be insanely rich. Unfortunately, the reality is, and if you want to check up on this reality, there's a lot of famous traders out there, much more famous than me, that will tell you 100% that if you are following the strategy properly and making more on your wins and heading for those targets and risking less on the losses and keeping the losses small and following that procedure properly, what you will find is that if you get a trader that's winning 6 trades out of 10, they are insanely rich, and they're probably one of the best traders on earth. Okay, because what you will find on a person with a win rate is that 9 times out of 10, their wins are less than their losses. Always. Because they keep clicking out of trades early, they keep taking wins at an early rate. If you include all your small wins, you'll have a high win rate. And you'll always have those big losses. So if anyone ends up with a fantastic win rate based off of a good system, trading a good strategy, then that person will be an insanely good trader, a really good trader. So if, for example, you take this Bitcoin trade and you say, I'm going to take it short and I'm going to target 77,500 and I'm going to put my stop loss at 94,500, for example, and you take this trade and it gets to 79,000 and you click out of the trade, then you can't really call that part of your win rate because you didn't reach target. You see, if this was to reach target 6 times out of 10 before you take a loss, then that can be concluded as a great trade. And that's where the problem always falls short, is if you are trading for targets and you're trading properly, you are not going to have that bigger win rate. You're not going to sit with that kind of win rate that you're thinking of, 8 out of 10, 7 out of 10. That doesn't happen. Those win rates come with scalping. They come with taking small wins and always the bigger losses. You see that it could also be, if you take like really tight stop losses and really small wins, almost 50-50, and you're just like trading in and you hit a win and then you trade and you hit a win, you trade, you hit a win, the next one you take a loss and you get out quickly and something like that. You could be sitting with a situation like that, scalping, that you could have a win rate that makes sense, but that is, you see, I've tried it as well. You see, the thing is, I've been doing this a long time, right? Really long time. So I've tried everything, and I tried doing that myself many years ago, getting in, trading on 1 minute charts or something like that, and in out, scalping. Okay. What I found was there's always that one trade. So for example, you take 8 trades, you work your nuts off for a few bucks, because scalping is small money, right? It's like in out. Okay. So you work really hard, you're working on those charts. And then there's just one trade that just wipes out all of those 9 wins for whatever reason, even though you have a plan in place, even though you have a strategy in place. There's something wrong with the human psychology that when that happens, you just don't take the stop loss, you just don't get out, or you just make a mistake, and it just costs you all the work you've put in. You put so much work in, and the more it loses, the more you don't want to take it out, because the more work it's destroying. And it's just insane. It really is. I just say, yeah, I hear you with the win rate, but win rates, they'll never make you money. They'll give you an idea of information of how well you're doing if you're making profit, but it really doesn't matter, because most of the people that have made all the profit in trading have got win rates that are less than 50% anyway, because they know how to follow their wins up, and that's how it is. Okay. Hate Diet Pepsi says managing your losses is like budgeting your wife. It's one of the most difficult things to do, is manage a loss. It really is, and you need to keep that in mind. When you get there, that's where the issue comes in. So many people say, I know, I'm going to go to work today trading, and I'm going to trade for 2 hours, and then I'm going to go to the beach. I'm going to make $200 every day, and then I'm just going to relax. And every single person who's done that goes in with all great ideas, the great plans of mice and men and so on, and they start trading. And instead of winning $200, they lose $200, because that's the mistake that every trader makes. Every trader always looks at the win, but they never understand the loss. So the initial idea is I'm going to win, and there's nothing wrong with that. Positive thinking, I'm going to win, I'm going to win. And then you lose. And then you think, well, I wasn't expecting that. I wasn't expecting to lose now, was I? What am I going to do now? And that's the problem. Because now you're $400 down instead of $200 up. Decision to be made. Do I stay and trade for the rest of the day and try and get that back? Or do I go down the beach and not relax because I just lost $400 instead of winning $200? So I'm not really relaxed. I can't afford to buy my ice cream now because I lost all the money. It becomes a quandary and a psychological issue. And these are the issues that destroy traders, because you end up thinking, well, you know what, I'll try and get the $400 back. I got the time, I'll just sit here and trade. So you carry on trading, and then you lose another $400. So tomorrow you come in, you're $800 down. It's always the same. I've heard it all before, and it's not my first rodeo. Been there, done that, sold the t-shirt one or two times, and it just doesn't play out. It never plays out. Rob, I guess the issue comes in, like you said, if you take profits early managing your trade, because that means you will almost never have a fixed RR. And I agree with you, win rate means nothing. Exactly, that's the point. I know people struggle to grasp it, because I did. I mean, it took me years to grasp it. That how, because the one thing they initially show you and teach you in trading is that if you win more, then you're going to win more money, aren't you? It just seems logical when you get into trading that the more trades you win, the more of a winner you are. They don't show you that you could actually take big losses on one trade, and then suddenly the win rate becomes kind of irrelevant as such. It is a thing they teach people. They teach people that win rates make them money, and the traders go in there with this wholehearted belief that they're going to make fortunes based on win rates, and then they don't realize what that's doing to them. This Bitcoin trade that I took the trade long. It went nicely into profit. I left it. Totally left it. What I did do is move my stop loss up into profit. I did do that, okay? And then it got taken out. Do I count it as part of my win rate? No. For me, it's a break-even trade. It made a few dollars, and you walk away because you didn't lose. I'm happy that I didn't lose. Okay, that's as good as it gets. And then you work on the next trade. Like I've said to you guys before, most of the profit is made on just a few trades a year, and then the rest of them are trades that hit target, and then there's a whole bunch of small losses in there. That's what you're looking for. You're targeting those big wins that you're looking for. Those are the ones that are going to make you money. Then if you're patient and you just let the trades run, then they'll work in your favor, particularly on Forex. On Forex, if you're trading on the 4-hour and you're taking 4-hour trades, you can have really nice trades on 4-hour in the sense that you just make that one green. That needs to be a green one. Nice bright green now. I'll make it bright green now. There we go. Okay. So, you've got your levels here. Particularly on Forex, they tend to go up, go down, go up, go down, go up. If you swing trade, position trade, you can put your stop loss in a nice safe area. Give yourself lots of room, work out the size of your trade, put the trade in place, leave it, let it run, leave it, let it run. When you see you're in a profit, like we did with a Bitcoin, is move your stop loss up into profit. Small profit, doesn't matter. At least that way, when it goes pear-shaped, you lose nothing. Because what you'll find is the majority of your trades will turn around before they've reached your level for whatever reason or another. It's because I noticed particularly this year has been an interesting year where things have just been topsy-turvy. People just keep turning things upside down. So just when you think things are going in the right direction, then somebody says something and you wake up in the morning and it's gone completely the other way. Gold looks like pretty much like a double top. Looks like you're getting a sell level here. There is also a level here to look for, and that is this level here. That is a demand level. You've watched my video on supply and demand, hopefully. But you know, you don't need to add it in. You don't have to use it. I like to just see it. That's all. I like to know where the money is. And it just tells me there is a level here because it pushed all that money up there. You can call it what you want. You can call it supply and demand, supply and demand. You can call it areas of liquidity, money, whatever. What I call it is, because it pushed all those bars up there so hard and so fast, it means there was a lot of buying going on in this area, which means there's some money left over here in all likelihood, in all probability. So it's coming back down into that money. Question now is it going to take that money and bounce back up? Or is it going to continue on its merry way down? The best way to do that is to see, you put that blocky in and just see if it breaks through that, or if it takes that money and starts sucking it back up to the upside again. Because it has broken structure here, and it is looking bearish. But with that, if you only look at that, if you only look at what I've done here and say, well, it's broken the structure here beautifully, and it's giving me that break to the downside. If this candle closes now, then I've got this short trade. Well, maybe not, because if you look at this, it's come into the money and it seems to be sucking that money up and looking to take it and go on back to the upside. So do be careful of these scenarios where if without that, it looks great. And if you get the next candle, you'll be like, oh, wow, that's going down for sure. So you jump in, you take the trade. And it's not to say it matters, because it'll go either way. But you look at it and think, yeah, but you know, if it takes that money, it's going to go back, and it's already starting to try to take that money and starting to go back up again. So it becomes questionable now. But you know, the other thing you've got to be careful of though is exactly what I'm doing here, but this is in a very small way. But in a big way, what a lot of traders will do is they'll add too many different systems into one chart. In other words, trading with price action, and you put moving averages in, and you put RSIs in, and you put Fibonacci in, and you put moving average crossovers in, and you put MACD in, and you got all this stuff on your chart. And what actually happens to you is you start trading against yourself. In other words, you start seeing a trade like I see here. I see this as short, and then I see something else in the way that's saying it could go long. Suddenly I'm trading against myself. It's like having two traders in the room. One says it's long, the other one says it's short. It's only that you're doing it to yourself now, saying, well, this could be long or it could be short. When you get a scenario like that, it's best not to trade it. But if you put too many things on the chart, you're going to get lots and lots of scenarios like that. And you're never going to be able to take a trade. You're going to be frozen. You're going to be totally frozen in the market. You're not going to be able to take any trades whatsoever. And you've got to take some trades. Otherwise, you're just not trading, are you? Yeah, you see the fixed target scenario, you know, Blumongo brings that up. And the fixed target scenario is, how can I put this? You have to have some form of target. Fixed, dynamic. You can make the target dynamic, because what I would do is I'll say my target is, let's say we took this short, right? So here we are, gold 4189, and we say, okay, I want to take this short. My target's 4,035. Okay, my stop loss is 4,285. My target's 4,035. Now, firstly, the stop loss is fixed. The stop loss is fixed because you want to lose less on your losses than you make on your wins. The target, the initial target, is also kind of fixed, but dynamic. In other words, we're not going to wait for it to get to that target and then wait and click out. No, what we're going to do is when it starts heading towards that target, we're going to start moving our stop loss up into profit, and then we're going to start moving our stop loss up behind it in the hopes that it's going to go even further than what it does. And if it comes back and takes our stop loss out, then we've made that profit. But we have an initial target. Now, why do we have an initial fixed dynamic target is you need to know that you're going to be making more on the win than you're losing on the loss. And it's not a fixed 2-to-1, it's not a fixed 3-to-1 or anything like that. It's a dynamic target. It's a target of, I just need to make sure that I'm going to be targeting more on the win than I'm losing on the loss. Because the idea at the end of the day is to make more on the wins and lose less on the losses. Now, what Tom's doing, he gets away with maybe because of the way he trades and the amount of research that goes into that trading and the way the stop losses are controlled. But I'm pretty sure that in his mind, he knows what he's targeting. Within his mind, I actually believe, because I have seen him trade, that in his mind, he knows that he's risking, say, 10 points with a view to, I'm going to make 15 points on this trade, or I'm going to make 20 points on this trade. Pretty sure if you ask him, he'll tell you that in his head. He might not put it on the chart. He might not put a line here and say that's where my profit is. But I'm pretty sure that he has a risk to reward strategy. And I'm pretty sure that in his mind, he will be thinking, I'm going to be making 20 points on this trade. Doesn't do it in dollars or rands, he does it in points. So his policy will be, I'm taking this trade here, I'm risking 10 points with a view, I'm going to make 15 or I'm going to make 20. Okay, that's the idea behind it. And then dynamically, when things start to turn or change or whatever the case, then he might be getting out other trades as a result of that. There might be a lot of, oh, I'm getting out here now, I'm done with this. Oh, I've made enough profit, I'm getting out of here now, whatever the case. There might be a lot of that. But for the normal trader, for the normal everyday trader, they're normally going to lose in a scenario like that. You know, someone like that who's doing it has been doing it for many years, and there's a lot going on in their mind that you can't see, that they are dealing with, that they're working with their system, and they know what works for them, and it's working for that person. And then you try and do it, and then for some other unknown phenomenal reason, it doesn't work for you. It's very much the mindset that goes with it. I mean, a lot. Hello from Philippines. Thank you, Rob. Appreciate you. Thank you. Thanks. Glad you're here. Glad to have you here. Once again, Blue Mango, I have this thing. I see here you're suggesting like taking partial profits of that. Now, in my trading career, I've done the partial profit thing a few times. It doesn't work. Taking partial profits, you know, you're taking some money off the table to make yourself feel better, to make yourself feel more comfortable. So what I swapped that around to is, instead of taking partial profits, I move the stop loss up into profit. Okay. So if I was to take a 50% profit on a, let's say I was targeting $1,000, a 50% profit would be $500. So I've taken half the money off the table. So now I can only lose half the money and it'll be break even. If I lose $500 and I win $500, I'm at break even. So if I'd moved my stop loss up to break even, it would be the same thing. And now I can actually take my stop loss up and move it a couple of $100 into profit instead of break even. So in other words, I'm already winning by just moving my stop loss rather than taking partial profits. And then I have the opportunity, if things go well, for example, let's say this trade goes well and it keeps on going, keeps on going, keeps on going, keeps on going, I can keep moving the stop loss behind it, and I'm making the full money rather than losing the money that I would have made, okay? Because that is actually quite painful. I've had that situation, partial profits, the trade's moving up, it gets to here. I take out half the trade thinking, well, I'm taking less risk now, and it goes the whole way. And then I look at it and think, I could have made all that money. I could have made all that money and I took it out. Why did I take it out? You know, that's the problem. That's the issue you're going to come up with. Whereas if you just move your stop loss up behind it and followed it up, look how much money you would have made. And then it could have kept on going further, and you could have kept on making more and more and more money. So it's much better to follow it up with stop loss. And I realized that many years ago as well, that it's much better to follow up with stop loss than to actually click out of the trade. Now, there are many times, and this is why it is not a fixed thing, all right, is there are many times where I'll look at a trade and I'll just say, I'm gone. I'm out of here. I'm done. This is it. I can see it's going down. It's failing. It's over. That you got to do. You're a couple of $100 in profit. You're targeting $1,000. You're $300 in profit, and it just starts turning against you. And you can hear the news in the background. You can hear the fundamentals. You can see what's happening, and you can see this is turning against you. By all means, get out, take the money, and go. There's nothing wrong with. Don't fix yourself into a corner and say, no, I have to do what Rob said and put $250 stop loss in there and then lose the extra $50. What for? Take the $300, walk away. There's nothing wrong with that. Move on to the next trade. I always say, if you're not comfortable, whether you're in a win, whether you're in a loss, whether you're just not comfortable with that trade anymore, do yourself a favor. Move on. Move on. Click out. Go to the next trade. Because do you know what? You're not comfortable with that trade anymore, are you? That trade's not working out for you anymore. So move on to the next trade and go and do something else. And then you'll feel comfortable again. Because the minute your body, your head, your fear starts to kick in and you start to not feel comfortable with something, then it just isn't going to work out. It's just not going to go in your favor. And it's almost like your sixth sense telling you it's time to go. And I do believe, Blue Mango, that what you say there about Tom is, I'm pretty sure that that's many a time how he takes his profit as well. He gets that, because he's been doing it for so long, that sixth sense that says to him, now's the time. Now he trades out and takes his money and moves on. So, yeah, absolutely, absolutely nothing wrong with that. It's interesting, but it's all in the psychology, and it's always in how we think and why we think that way. Do you trade everything on the 4-hour time frame or only currencies? Ramford asks, do you trade everything on the 4-hour time frame? I trade everything on the 4-hour time frame. I invest on the day and the weekly. Okay, investing's got nothing to do with charts though. So on my trading side, on leverage trading, only 4-hour. I no longer drop to 5 minutes or 15 minutes, or I used to. I don't anymore. Only the 4-hour. It's easier. I just leave it there. The Telegram group, somebody asked here, do you have a Discord or Telegram group? The Telegram group is in the description down there. Just go and it says Telegram. Go and join the group, the crowd. Everybody's welcome to post on there and chat to each other. Just don't drive me insane and ask me crazy questions in the middle of the night. Bear in mind that I might stay in a different time zone to you. So just on the group, you can post to each other and talk about things, trading and whatnot. Okay, that's fine. And I often post a trade on there or information that I'm doing or my videos that are coming out. I put on there for you guys so that you don't miss them. If I'm annoying you, just tell me, but I put it on there so you guys can see it. Just keep one thing in mind about the Telegram channel. And I stopped the Discord channel because there was a scammer on there who tried to pose as me and tried to sell everybody stuff. And I've actually had the situation on YouTube recently. Someone was commenting on the videos with my name saying, go here to WhatsApp or whatever. I'm trying to sell you guys something. Watch out for that. It's not me. So on the Telegram channel, just understand that if there's something on the Telegram channel and somebody's trying to sell you something, it's not me. Okay, I'm not going to try and sell you something on the Telegram channel. I will put my videos there. I'll advertise my live shows. I'll show you guys a trade. that sort of stuff. But that's kind of where it stops, and we talk about trading. Right, so professional trades often sense a change in momentum and will tighten their stops. Professional traders often sense a change in momentum, will often tighten their stops. And you see, exactly what was said there is a very relevant point. Is most people who've been, I wouldn't say professional traders, I'd say traders that have been around for a long time, like me, and other traders that have been trading for a long time, you get a sense of the market. And this is where trading comes into its own. Is you can be taught how to work with a chart like this. You can be taught where to draw lines and where to take trades and how to act like a robot and even follow the strategy where necessary. But gut feel sometimes just comes in and just plays, okay? A good example of that is that silver trade I took yesterday, where I said, I got a feeling this is going to turn around, even though nothing on the chart said it's going to turn around, nothing whatsoever. I mean, if you guys had looked at that, you would have said, Rob's gone insane. And maybe I have. And I took that trade based on that factor. So, yeah, gut feel, you'll get it. After a couple of years, you get it. You start to get that gut feel for what's going to happen next because you've seen it. It's subconscious. You've seen it before. You know it's going to happen again. I just want to go back to Blue Mango profit here, leaving a bit managed it further, moving your stop loss, or would you suggest when price do hit the line, you just manage the whole trade? Exactly. When the price hits its target. So let's say the price target, let's say this is the trade, okay? And let's say your target is this green line, 1747, okay? And let's say the support is here, and your stop loss is down here at 17, whatever. And it goes all the way up here. When it gets to the green line, you're going to say to yourself, well, I've reached target now. Wow, I've reached target. I'm going to get out of the trade. No. As I said to you guys a few times, most of my profit is made on 1 or 2 trades per year, and those are the trades that go past that line. In other words, you move your stop loss up, move your stop loss up. Maybe you'll even add to the trade, make the trade bigger on the way. Depends on you. You get there, you move the stop loss up close because now you're pretty close to target. If it loses a few bucks on my stop loss, I'm okay with that. It breaks through target and it breaks out and breaks up because it's usually where your target is. It breaks away from the target and flies. Then you're moving your stop loss up behind it and then it keeps on flying, what you might call a 10-bagger in shares. And it just starts making you money. Those are the best trades you're ever going to have, and you're going to have 1 or 2 every year, and those make you a lot of money, and they're fantastic. The other ones, of course, that make you money are trades like the VIX, for example, where you've been sitting on that number for months on 15, and it's not going anywhere, and then suddenly it just shoots up to 40 in a day, makes you a fortune, and then drops back to 15. Those you get those too. Those are great. But yeah, it's got a lot to do with being flexible, being dynamic about it, and not just clicking out at every opportunity. That's one of the biggest issues that traders have. You see, one of the big things is you get into a trade, and here's your trade, and you take the trade here, and it gets up to this level here, and you're a couple of $100 in profit. You're targeting thousands, but you're a couple of $100 in profit. You see the green, and maybe because you've been a little bit in the red on that trade, maybe you were $100 in the red, and then suddenly you're $300 in the green. Most traders will click out on the $300 and run and take that small profit and then declare a win rate, a big win rate. Look at my win rate. Look at that. I got a win rate. It's not a win rate. It's basically you're either making a profit or not. It's one of those things. Boom, worthy insights and views. Thank you. Yeah, good. Okay, cool. I think it's something I have to work on. I think sometimes I leave a lot of profit on the table because I'm so happy just to hit my targets. I don't let the winner run. Yeah, that is what most traders do. Most traders are so happy to hit their target. I mean, it is a big thing to hit your target. It's massive when you hit your target. It's like, wow, because those targets are big. The thing is, sometimes the targets are not as big as they should be. And if you can follow the winner up, if you can just move the stop loss up right behind it, you're in a profit, you're making a decent profit. Try and make some more if you can. Because when they run and they run well, and then they make lots of profit. How many times have you guys taken a trade? You've taken a trade and you've taken the profit and you've gone, oh, that was a good profit. And you're really happy with the profit. But then the trade keeps on running and it keeps on going, and you think, gosh, if I'd stayed in the trade, I would have made double my money. That's actually more painful than losing sometimes. You know, you think, why did I get out of that trade? So yeah, be careful of that too, which is why if you can, follow the trades up. You know, what's insanely annoying is trades like the Bitcoin trade, for example, where I had it long, okay, and I moved the stop loss up into a small profit. It comes back, takes it out, right? So now I'm really happy that I haven't lost any money. I haven't lost anything on the trade, and it's okay. Never went to my targets, but it's okay. I'm good with that. It's all good, right? I've moved it into profit, so I haven't lost a cent, not one drachma. But what happens? Let's say it bounces now and it goes flying up to the targets that I wanted in the first place. That's also pretty painful and pretty irritating. So what I normally do is I don't revenge trade. What I'll do is I'll keep an eye on the trade and so sort of look back on it, you know. And if it sort of changes structure again into my favor, then I'll look at that and say, well, maybe that's a trade that I should look at. So for example, you want to look at this and say, maybe if this breaks to the upside, okay, which would be kind of over there, it'll break through that level, go past the prior high, it'll break through that trend resistance and break up, then I'm going to take the long trade on it again, something to that effect, you know. Let's see what happens with it. But yeah, effectively that's trading, and that's how it works. It's very difficult to walk away from scenarios. I get married to things like this US dollars that I get married to this all the time. I'm always in here, always trading this thing. I am a little bit concerned about this going long because of this possible head and shoulders here, so I might wait for it to break the shoulder. I'll see how that goes. Ethereum looks very similar to Bitcoin because it's crypto. All the cryptos basically does the same thing. You've got to be careful on crypto. If you're a crypto trader, do be careful of this one thing, and that is they all tend to follow each other unless they're trading against each other. But if you're trading the crypto against the dollar, etc., you're going to find it all just going in the same direction. So watch out for that scenario. Most of the indexes do that as well, but some of them might actually go against the grain. So yeah, just watch out for that. That's where Forex is really cool, because Forex you'll find kind of does its own thing on different products, and you get the ups and downs. Actually, I got the question now, which software are you using here to show your charts? Is it TradingView? This one's not the TradingView. This one, guess what, guys, is MT5. This is an MT5 program that I've had for about 100 years or so, since before the times of the pyramids or something like that. It's a really old charting system. People still get it and whatnot, but it's a bit outdated against your trading views and all that sort of stuff. We do have TradingView, as you guys know, that we trade on. We've traded on it a lot. We've got C-Trader from different brokers, you know, different stuff. But these are my old charts, and I just like them sometimes. So, and it's easy for you guys to see what's going on here. So this is just MT5, and in the old days, MT5 was the state-of-the-art thing. But the thing I find with MT5 is you've got to go into this MQL5, as they call it, community, to get any extras that you might need to do anything on the charts. Now, luckily, I'm one of those traders that doesn't need a lot. So I don't go in there and I don't buy anything and I don't need anything for the charts, but that's how they make their money, I suppose. But yeah, as far as that goes, one of my brokers supplies me this. Another one supplies me TradingView. Another one supplies me C-Trader. Another one supplies me whatever. There's so many different damn charting programs. Well, if you've seen them one, you've seen them all. I'd probably say that, yeah, if I look at it, TradingView is probably on top, as far as great programming goes. But yeah, that's just my call. I don't know. But yeah, that was the question. What charts are these? Yeah, this my old pyramid charts for years. I've had these. Yeah. Okay. Do you have a time limit to allow the trade to work before you shut it down? What kind of leverage do you usually use? I use the leverage that's on offer from the brokerage, and it can be anything from 100 to 1 to 500 to 1, but I prefer 100 to 1. Do you have time? Because too much leverage is not great either. Sometimes you just have to deal with it, eh? And just be careful of that, by the way, guys. And question is, what kind of leverage? Just be careful of this, because you'll find you're trading on one account, because like I've told you before, I'll split my brokerage accounts, because you don't want to put all your eggs in one basket, wake up on Monday morning, the broker's off with your dosh, that sort of thing. So now you're trading with this broker, and you don't realize that maybe everything you're trading is 100 to 1. So you're trading it and everything's great, and you're doing your trades and what have you, and you're trading one contract for that and two contracts for that, or whatever the case. And then you get a new broker and you take them on and you start trading with them, and you forgot to ask them what the leverage is. That's happened to me before, when suddenly I was trading 30,000 on a product, and that was the right amount. And then suddenly I was trading 300,000. I was like, what on earth happened? What the heck? And you just see the money. It moves 1 point and just all your money is going out the door. And yeah, just watch out for that. Don't get caught out by that. What I normally do when I take on a new broker is just do a couple of small 0.01 trades and just see how it looks, or just check the amount that you're risking before you start just going willy-nilly into the trades, because the different brokers sometimes offer different leverage, and you end up with different amounts on your trades. And when you've been trading for a long time, your brain is sort of hooked into that, and then when you take the trade, it's quite shocking when it's not the same amount. So just watch out for that. Yeah, I've never actually mentioned that, but be careful of that. Okay, so the question was, do you have a time limit to allow the trade to work before you shut it down? Thanks. That is very discretionary and dynamic as well. I don't have a fixed time limit. So I'll take a trade and I'll look at it and I'll say, I'm getting into this trade and I expect the target to reach there. And if everything is slowly going in the right direction and it's taking a long time, it's okay. It's okay. I'll wait. I'll wait for it to build up. But if it, and if it's doing like this, you see like this up, down, and I know it's taking time, it's going like that, that's fine. But if it's doing something like, I'm in the oil, let me look for something here. I don't know if there is anything. S&P 500. I'm just going to use Bitcoin as an example, but it's not the perfect example as we stand at the moment. But if it starts milling around in a very tight sort of range, up and down, 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 and going nowhere for days on end, then I'll just look at the trade and say, bye, so long, and thanks for all the fish. I'm not sitting here waiting for that. And normally when that happens the next day, it'll have a long green or red candle or something equally ridiculous. But, that's life. But yeah, that's my time limit. I kind of like, if it's not doing what it's supposed to, if it's not heading in the direction, if it's just milling around like these little candles here in a straight line, going nowhere fast, staying in that tight little range, not going up or down, just going nowhere, then I'll call it. I'll say, no, I'm done with that. Except on those trades, for example, like a VIX trade, where you've taken the trade with a view to it, one day it's going to spike. I do that, so I'll leave it there forever. So in other words, I buy it on the 15, leave it there and wait, and wait, and wait patiently for months on end. I'll wait, and then it will suddenly spike. But when it spikes, it's going to make you 40, 50 grand. So, you're kind of in that sort of trade. So different strokes for different folks, different strokes for different trades. And also, like I say, it's very dynamic on the sense of, you know, if I'm just not happy with what a trade is doing, what you've got to be careful of on that as well, though. Let's say it shoots up like this, and then you get what we call a flag pattern. You know, the flag pattern where it just sort of mulls along to the side. So it's mulling along to the side here, and it's not going anywhere. Be careful of that, because if you've got a flag pattern developing, it's going to resolve to one or other side. So don't get impatient with that. If it's just a little flag pattern or something like that, just wait for it to play out, okay? But what I'm talking about is when you start getting those small little dots and it's just teetering along, it's almost like a public holiday for years on end. Those I'll just get impatient with and let them go, because I'm human and everybody gets impatient and doesn't hold on to things for life. But if trades are moving like this, then I'll stay with the trade. That was a long-winded answer to your question of will I as a time limit on my trades. Very long-winded question. Yes, no, I let them go. Yeah, so for those of you who missed, sorry, for those of you who missed the trading strategy, I did it right at the beginning of the video so that you guys can enjoy it. I always do the training right at the beginning of the video, because the main reason is by the end of the video, I'm probably too tired to do it anyway. But most traders lose because they follow the wrong strategies. They believe in win rates, and they don't understand that you need a strategy to make money. They don't realize that fear and FOMO destroys traders. They just don't get it. They don't realize that charts can't predict the market. Charts are great for taking trades. You know, this is not predicting the market. What this chart is telling me is, you know, you've drawn a line in the sand, we've drawn this line in the sand is a trend resistance, and if we get a green candle out there, I'm going to go long and I'm going to take a long trade on this. If I get a red candle coming down there, it breaks through there and goes out the bottom, I'm going to take a short trade. That's what the chart's telling me. Is it predicting the future? No. It's just giving me an idea of which way I might want to trade, which way I might want to trade this product. That's all it's doing. It's not really predicting the future or anything like that. It's not telling me, oh, for sure it's going that way. No chance of that. So don't get overexcited about these things, guys. Charts don't make you money. The strategy makes you money. Just once you've taken the trade, just manage the trade. Once you manage the trade, then you'll make the money off the trades. So Brent crude oil is actually turning against me now. Again, just doesn't want to go up, doesn't want to go anywhere. I could be the owner of Brent crude oil for the rest of my life. I don't know, because this thing is just not going. Just refusing to go anywhere. I'm beginning to wonder if the whole future of oil is in jeopardy, because it's the first time in many years that I've seen oil sit under pressure for such a long period of time. So yeah, I don't know. You know, apart from the issues that we've had in the past, this is very unusual. I'm beginning to wonder if the future of oil is in jeopardy in many more ways than one. There might be more reasons behind that than we'll ever understand, but interesting. So gold has hit this level, seems to be stuck at that level. I like to use the supply and demand levels or liquidity levels within the area so that it just gives you more information is all, so that you know that there is a level here that's protecting it from falling all the way immediately. You see, I don't want to. Your info asks, do you look at fair value gaps, order blocks, and all those for your trades on support resistance, or do you only trade support resistance trend lines and RSI? The thing with the fair value gap, it's an ICT concept, okay? Does it work? Doesn't it work? You know, it's a very simple concept. There's a fair value gap right there, okay? So the tail gap, there's the fair value gap. You could say maybe it worked because that came back up there, found some money and went down. Does it work? I've tried it a few times. it can work. But like I said to you guys earlier, keep it simple. Don't put too many systems on your chart, because you're going to start working against yourself. You're going to start causing problems for yourself. You're going to start seeing things that aren't there. Now, yeah, you know, I try and keep it to the point where I can see these things in the market, and it's actually terrible. It's actually terrible. It's almost like knowing too much, because if you take all the lines off the chart, I can still see what I see. So I can see those fair value gaps. I can see those order blocks, as you call it, and I don't want to see it. So I try and just keep it to resistance, support. I do use the liquidity on the supply and demand. I do keep that in mind. I draw them in, as you see here. And I also like to use why do I like to use the RSI from time to time? Why will I take a trade, for example, on silver because it's overbought on RSI? And the main reason for that, as I've told you before, is if you look at how the pros trade on the floor, most of them will be using RSI only, nothing else. They don't care about anything else. Lines, support, resistance, liquidity blocks, ICT rubbish, whatever. All they care about is an RSI. In other words, it's overbought, so we're going to sell. It's oversold, so we're going to buy. And then they got deep pockets, and then it's a deep pocket purchase, and they're just going to buy it and hold it until that RSI plays out. So that's why I like the RSI, because I believe in it, because I know that the big guys use it. And if the big guys are using it, I can ride on their coattails and, follow what they're doing, because if the big guys are doing it, then and you do it with them, then you're going to kind of make some money, aren't you? So there's that. But am I going to trade fair value gaps and that sort of thing? No, not really. I actually did a video for you guys the other day on the ghost candle. There's a ghost, an engulfing candle with a tail, And is it something I'm going to use? No, certainly not. It's just another line in the sand. Everything you do on the charts, everything you do on these charts, everything that you do on these charts, every line you draw, every block you draw, every gap you see, everything you mark out, is effectively you drawing a line in the sand so that you can manage a trade. In other words, if you would take all the lines away completely, have no system whatsoever, and just decide I'm going up or down, it would be the same thing. It's just that now you're giving yourself a much more comfortable feeling inside that you seem to know what you're doing, okay? In other words, you've told yourself, I know what I'm doing because I can see that this is going short. So I know that this is going short because I've learned that and I know how these charts work. So I give myself that comfortable assurance that I know what I'm doing and that I'm taking a chart, a calculated chart trade. Okay, and that gives me the ability to take that trade. But effectively, all of the systems work, and oddly enough, some of them will work against you, which is why we have a market. We have buyers, we have sellers, and the buyers want to buy and the sellers want to sell, and they've all got their reasons one way or the other. Okay. If I might add to your assessment of FEG, the question is not only does it work, the question is does it work often enough so that you can build a strategy around it. What I always tell guys when the question is asked, does it work often enough? Like I said to you now, charts don't predict the future. They don't make you money. They just give you the ability to feel more comfortable about the trade that you're taking, to make yourself feel like you're doing the right thing. So, yeah, does it work often enough? Most traders will tell you to backtest, okay? Go and backtest it, go and do a whole backtest scenario and whatnot and spend hours on this backtest. And, what I find traders do is they make a lot of work for themselves, a lot of extra work for themselves. They draw up the most amazing journals and little sheets and goodness me, what else. And they draw up they keep charts for the next 10 years that they've taken screenshots of, and then they start doing all kinds of little back tests, and they make so much work for themselves. I believe it's because traders get bored, so they make all this extra work for themselves, when all you've got to do is like take a trade, buy it or sell it. That's all you really need to do. So what I normally tell a person is, if you're not sure of a system, let's say you want to trade fair value gaps, now you've decided I'm going to trade fair value gaps, then do yourself a favor, carry on with the system that you're trading with right now, don't change that, and then go and open a demo account, get a demo account, or just do it, like look at it and just try a few trades. Do it for a week, 2 weeks, try it out and say, forward test it. Don't back test it, because the markets change, right? So you're back testing on an old bit of information from a few weeks ago based on what happened this year, not what's happening in the future. Rather forward test it for a couple of weeks and say, because then you don't know what's happening next. You've got no idea what's happening next, so you can't really base it on anything. So you just look at it and say, well, if I was to take this trade here, this is what I would see, and there's nothing in front of it, so I can't see any picture whatsoever. So this is what I would see forwards, nothing. So I would take this as a long, or I would take this as a short. Take the trade and then do it on a demo if necessary. Take the trade a few times for 2 weeks and determine how many times that trade wins for you, how many times that trade loses for you. Does it look like a good option? And then work with it from that. I always insist that you forward test. Back testing is ridiculous, because back testing is very much a scenario of, if I look at this over here or this over here, I clearly know what's going to happen next, even if I hide it. Even if I hide it completely and you can't see it, I know what's going to happen next. I know exactly what's going to happen next. You can't hide it from me. I know where it ends. So, and then you back test something and you think you know what you're doing. Forward test it. Forward test it. You don't know what's going to happen next. So if I'm forward testing this system here, and I'm saying, well, I'm going to forward test supply and demand, not the breakthrough. I'm going to forward test supply and demand. So in that case, I would have to buy it and see if that works. Does it work? Does it actually work? And also what you got to figure out is, does it work according to my plan, my targets? Is it going to work according to my targets? Maybe it only works for small targets, not for big targets, So try it out and see if it works for you. That's the best way to do it. Back testing, you can do it, but for me, it doesn't really tell me anything. It just tells me what happened in the past, and I can see what's happening next. It's very easy for me in hindsight to show you a fair value gap here, for example, and there it takes it, and then it goes, and that one worked, okay? That's very easy for me to do that. I know you've got backtesting programs where you don't see what's in the front, but you know what's happened in the front. That's very easy for me to take an old one. But if I was to take a new one and try it out there, that'll give me much more information, because firstly, I don't know what's happening next, and I'm basing my decision on what I know about the system, and I'm going to take my trade based on what I know about that system and see what happens next. Then I'll know if it's working or if it's not working. That makes a big difference. That really does make a big difference to how you test something. How do you pinpoint your liquidity block as shown on the chart? Is it the last candle before the price spiked in the opposite direction? Yes, that is correct. On this particular chart, yes. You see, the whole reason, they call it supply and demand, and you're calling it a liquidity block, whatever the case. It's just an area where there's liquidity. You're quite right. It's an area where there's money. It's an area where there's orders. Why is there orders there? Why? Well, you see, what we normally do is just before that was a red, and then there was green. If there's 3 green blocks after that, or the other way around, 3 red blocks after that, then that is a strong move to the upside. But in this case, there's 5 going to the upside. And you can clearly use your gut feel and see for yourself how strong the move is. I mean, if there's 3 tiny little blocks, then it's not really a good move, is it? But if there's 3 strong blocks like that and more, then clearly it's a strong move to the upside. So something pushed that money up. something pushed that money up hard. The assumption is that there's some money left behind in that area because it was pushed up from there previously. And sometimes you'll find confluence with another support or resistance area, sometimes not, but that's what the order block's about. You're looking at it and thinking, there's a liquidity block there, there's money there, there's money in that area, because after that it pushed up hard. So it should come back, look for that money, and try pulling out of that money and going the other way. If it pushes through that, then you also know that it's going to push through hard because it's pushed through that money and it's on its way. So yeah, that's what I use it for. You don't have to use it, guys. It's not imperative, but it does help if you know how to use it and you know how to see it. But it's very simple. Both ways. Look here on the way up as well as another one. I can draw one there as well. I don't draw them all in. I don't draw these blocks in normally. But if you draw that one in there, there's one to the upside as well. Ooh, and that one's in total confluence with the resistance. So I'll draw it in for you so that you can all see it. See, there's your green candle before, and then afterwards, you've got these red ones dropping down. Strong red ones, effectively. There's 4, and that's come down into this level. So now you've got a supply level, a demand level, both sides, okay? If it takes that, it's going to go back up into there. That's a resistance level, so it's probably going to hit that and come down again. Now, this could be construed as a break and read, or no, it's not. It's a drop-off. It might retest the area, though, and then come down. So yeah, so there's a level of money there, there's a level of money there, but that's the strongest level of money up top there, because that's a resistance. And that resistance, you know, the resistance levels and the support levels are big areas of money. Why do I say they're big areas of money? Because every time it hits there, it comes off, which means that there's orders there that somebody's putting in. So somebody's pushing the money away. Just remember, you're not looking at charts. You're looking at human beings. There's human beings behind these charts that are doing things, that are making the markets move. And the majority of the money that makes the markets move is institutional money, pro traders, the big guys, not us. We're nothing in this great scheme of things. Blue Mango says FEG is not reliable enough as a strategy. And okay, you know, like I say, it's all the same. Everything works, and it really doesn't matter. Supply and demand. Supply and demand I like because it does kind of filter in, like in this case, it kind of bounces into the resistance area and gives you a little bit of confluence and gives you a little bit of direction. So I don't mind checking out a bit of supply and demand. So there's very much, for me, in my personal capacity, I very frequently use, obviously, support and resistance. I use the trends, okay, within the support and resistance, the trend lines, which is basically support and resistance at an angle. And, of course, then I throw in a bit of supply and demand just to see where it is in between, so that I know in this middle area here, there's something happening, because all I want to see is where that is, that's all. And it's in the middle here, because otherwise it throws me off on the trade. And then, as you know, we trade 3 ways. We trade in the range, we trade in the trend, and we counter trade or break down, break out. If it counters the trend, that's just like a breakdown. Or if it breaks down through a support, breaks up through a resistance, that's basically what we're trading. And that's easy. That's what we look for. End of story. Nothing to it at all. But as a strat, look, if you're going to use, for example, a fair value gap as a strategy on its own, then I would be concerned that that's going to work for you. Normal gaps will get filled at some time. Normal gaps, yeah, those are different. But fair value gaps, they're quite frequent in the market. So I think you would be able to use them. But for example, this fair value gap would have done nothing for you. It would have just wiped straight through it. Whereas the supply level has actually worked, or the demand level has actually worked. It's actually looking into that and working. So for me, support, resistance, and supply and demand, or trends, that's all you need. You don't need anything else in the market. And then, of course, I do, from time to time, throw in an RSI. It'll just be on and off. I don't leave them on my charts. And then sometimes I will actually look at the volume if I'm not sure. if I'm not sure if a huge red candle or a huge green candle is actually worthwhile looking at, then I'll throw the volume in and I'll just check on the volume if it's worth my while following that trade or not. So that just gives you the idea of how you can take the trades and how not to take the trades. See, that would be a fair value gap right there. And I'll just draw that in as well so you can see it. And we'll take it out. But that would have been a gap there. That's like if you were back testing. So you see what happens there. Okay. Comes down, leaves a gap, comes back up, takes the money, goes down, goes back up, breaks through it and carries on. So it can only be used once as well. It's just for information, that's all. I don't want to confuse you guys with stuff like that. Stay away from that. We don't use those policies. I would suggest if someone can trade for 30 years and make money from it, he knows what he's doing. Your strategy is simple, clean, clearly profitable. It's a question of understanding that you're not going to take $1,000 and turn it into $100,000. It's a question of understanding that it's a career. It's a question of understanding that it's a slow build-up way of making money. And it took me a long time to also understand that I needed to invest, that I needed to buy shares, set and forget, which luckily I do now have. But in the beginning, I used to think that you could time the markets, and I made all the mistakes. But I don't feel bad, because every single trader that I've ever come across, I'll ask them, has this ever happened to you? And if they're honest, guaranteed it's happened to them as well. They've done exactly the same thing over and over again. So it's not something new. And no matter how many old men like myself will come along and tell you, don't do that, don't make that mistake, you're still going to go and do it. You're still going to go and make that mistake, guaranteed. So many guys maybe come onto the show here or watch a few of my videos, and they've only just started trading, and they listen to what I say, but they'll still go and make the same mistakes simply because we're human beings. And in the back of our mind, we think, I know better, and you're going to go and do it. I did it 100 times. People told me don't do it, and I did it. So does it matter? No. You're going to make the mistakes. Just know that when you make the mistakes, learn from them. Don't get fooled twice. You're not supposed to get fooled once. You know, I've had people that have been nailed in the crashes and things like that they just didn't get it. And this is why you manage your risk. You know, a lot of people tell me you don't need a stop loss. You don't need a stop loss in the market. You don't need to have, and I don't mean it has to be a physical stop loss. But did you know that even pros have an idea in their heads of where they're going to end? Like, if this market goes to there, we're out of here. We're going to start looking to get out of this. And if you don't have that in your trading, then you're in trouble. You're going to be in trouble, because there's a threshold for everyone. So if you say, I'm just going to hold this trade until blue moon, okay, until the moon freezes over, there'll be a point when you can't hold on any longer. And if you don't believe that, just put your mindset into the mindset, and I've gone over this before, of, let's say you have $100,000 and it's your last money that you've got in the world. You don't have another cent. You've only got this $100,000. And if you lose it, you're going to be sleeping on the street, because you've got no job, nowhere to go, no company, no nothing. That's it, okay? And then you go into trading and you lose $10,000 of it. So your threshold might still be okay. You might still be like, okay, I can make that back. Then it goes to $30,000 loss. So you got 70,000 left. Maybe your threshold can still take that. Maybe you're still thinking, it's okay. It's going to turn around and it's going to come back for me. I'm going to be okay. But then think to yourself, that starts getting to a $70,000 loss. How's your threshold? How strong is your threshold? At what point are you going to turn around and say, I got to get out of this because I'm in trouble now. I'm in so much trouble. I got to let go. And you know when you let go, what's going to happen, right? It's going to go shooting back the other way. You would have got all your money back. But, you know, that's painful. That's how it is. All I say is every single trader has got their threshold. I don't care who they are. They have a threshold, particularly when they've got it all on the line. And it's their last money. What that threshold is up to you. So if you don't believe you've got a threshold, just take your mind, put it in that place, and say, if I took all the money that I've got, at what point of loss would I have to get out of a trade? At what point would I have to say, I have to call it because I'm in trouble? And then you can decide for yourself what your fear levels are, how strong your mind is. Believe me. Rob, as the price stands now, you'll wait patiently for the price to either go back to the top block, reject, or break through the bottom block before taking a trade, correct? Yes. I will patiently wait. And this is one of the things that I preach on a regular basis, and that is wait for the trades to come to you. Don't chase the trades. Wait for it to come to you. It'll eventually come to you. And if it's not going to be this one, then it's going to be this one. Okay? You're going to look for this trade. Maybe this one will come to you. You know? Or if that one's not coming to you, maybe that one will come to you. Maybe that one will work out for you. It doesn't really matter. Be patient. Wait for the trades to come to you. One of the little tricks that I sometimes use when I'm looking for trades, and I've got, you know, you've seen the size of my watch lists. Some of my watch lists are rather insanely big. What I'll do is I'll put an RSI on one chart, and I'll put it at the bottom, and then I'll just go through the charts one after the other. And if the RSI is not showing overbought or oversold, or it's not in a good spot, then I won't even analyze the chart itself, because it's just too much work to go through everything. But if I see something catch the eye, then I'll stop, and then I'll go through the whole process. That's something that I often do as well. See, like here, because I've done it before and I've got my stuff in place, this would catch my eye immediately because it is on a trend resistance, it's on a demand of money, it's on a support, and at this point it's breaking to the upside. It looks like it wants to break to the upside. But you got to wait for the trade to come to you. You got to wait for the candle to close. That's the important part. Seriously, seriously important. Hello from New Zealand. Welcome. Good to see you. I'm glad to have from New Zealand. Good morning from Montana. It's Billy again. Missed you the last couple of times. Teach me, my friend. Trust me, I need all the help I can get. My question is, do you have any tricks for a prop firm? Yes, I do. I got lots of tricks for prop firms, but prop firms, I didn't believe in prop firms until last January. In fact, I thought they were all a bunch of scams, to be fair. Silly me, eh? But then I came around and I realized that they can be a useful tool for many traders who don't have capital, for example, who can't put capital into the market. So it gives them an opportunity to trade with 100,000 and have maybe, you know, if you make a profit, you get 80% of the profit, 90% of the profit, depending on the prop firm. So it gives you the opportunity. But what it also does, especially for new traders, people that want to trade and they just get into the market, what it does for new traders as well is, instead of just working on a demo, because a demo doesn't give you any insight, because fear and FOMO is what destroys traders, and demo doesn't teach you fear and FOMO because it's a demo. Demos are easy. Demos, you're just trading with lines. But when you're trading with real money, it kind of changes that. So what I find is you have to pay for the prop firm account or the funded account. So now you've got some real money on the line. And when you've got some real money on the line, and then you start wanting to make a profit. So you see yourself really close to taking that profit. Maybe you're going to take $12,000 out of this, and you're at $11,000. You most certainly don't want to lose that $11,000 when you just need another $1,000 to get your profit out, do you? So then it teaches you a little bit about fear and FOMO. It teaches you a little bit about how to control your mindset and your risk and that sort of thing. So the wonderful thing about prop firms is they teach you that discipline. They teach you that fear and FOMO exists, and they teach you how to trade with kind of real money. So that when it comes around to you putting your real hard-earned cash into the contracts and market, you've already gone through that process. But believe me, it still changes. It still becomes quite serious when it's your hard-earned money in the account, and you could lose it. It still becomes quite insanely serious. But prop firms, there's no trick to them as such, rather than you just trade them the same way you would trade anything else, and try to make a profit on them. There's a lot of people out there talking about having 3 or 4 different prop firms and trading one against the other and all these fancy fandangled things. That's not going to work at the end of the day. The only way to trade with a prop firm is to trade it the normal way that you would trade your normal trading, but where the prop firm limits you is on the amount of drawdown you can have on any particular day. Most of them about 4% in a day, maybe 7% overall. And so that stops you from putting, for example, 10 trades in. So for example, on this account, I could go, oh, there's 12 trades. Let's just take all 12 trades and we'll risk whatever. Let's say we're risking $1,000 per trade. So you would risk $12,000, no problem. But the minute you go and trade it on a funded account, you only are allowed to risk 4% of your account. So if you had a $100,000 account, that would be $4,000. And if you took 10 trades and they all went pear-shaped, they'll close your account. So that, you've got to work your way around the discipline of a prop firm. But we've been trading prop firms for you guys on a regular basis with those prop firm accounts that we've got. I've still got some that we trade together. And I haven't traded them with you the last couple of days or weeks because I kind of need to concentrate on the main stuff. But it's okay. We'll definitely trade them together on 1 or 2 shows, and we'll put them out there so you guys can play. But prop firms, there's no real trick to it. It's just trade it like you would trade anything else. Learn how to trade from it, and then when you've got your real cash, just put it in the market. And then the trick is where I warmed up to them is in the past you would do a demo and then you would go straight into your cash. And then a lot of traders would lose that cash immediately because they don't really know that there's a big difference between demo and cash. Whereas that sort of slots in nicely in the middle, and it gives your mindset time to settle and understand what's going on. I'm still not 100% convinced by prop firms and funded trader accounts, but they are what they are. They're a necessary evil. Because what I've seen is a large percentage of traders don't have large sums of money to put in the market, which is probably the gap they saw as well. I mean, clearly. And a lot of traders were getting in with $1,000 and hoping to turn it into something big, and then they lose it rather than turning it into something big. Maybe it's not $1,000, maybe it's $10,000, but either way, you get into the market thinking you're going to turn into something big, and then it doesn't. Whereas the prop firms give you the option to do that and get into the market. So, yeah, I warmed up to them this year and I understand what they're for now. Do I trust them 100%? No, not really. Okay. Hello from South Africa. Hello. For those of you in South Africa, I'm in Cape Town. Thank you for taking the time. My questions, God bless my friend. Of course, your questions are always welcome. I always appreciate an intelligent question, comment, whatever. I really don't mind. The only thing that gets sometimes irritating on the channel is cynical comments, those nasty ones. And yeah, I deal with it in my own way. I'm quite relaxed about it, and quite frankly, the way I look at the channel is 98% of people are gaining something from it, are happy with it, and it's 98% liked. So those 2% that are cynical and don't like it, so what? But I'm always into a good question, or, you're always, there is no stupid question, by the way. They're all worth something as long as it's a question. If you don't know the answer, then it's a question. Hi, Rob, everyone, a bit late today. Yep. Well, it's almost closing down time, but anyway, that's great. I have $500 match per day on my 10K prop firm, and 1K overall loss for losing the account. Costs to get it was $100. So I get to pay $100 to play with 10K and learn how to trade properly. Never trust a prop firm. It's there for a purpose. Use it for said purpose. Yes, Daniel, that's exactly what I'm saying is, I'm not going to sit here and say, oh, yes, just trade with prop firms. Of course, they are. I don't know what to say about them. I don't, do I trust them? Certainly not. But look, if you guys need a prop firm account, I've left some links in the description, but I'm not saying to you that these guys are going to be 100% and all that. No, it's a chance you take. And but they're a necessary evil, like I say. I realized this year that they are a necessary evil because a lot of guys don't have the income or the money in the bank to just throw at the markets. And even if you do, you probably shouldn't to start with. You probably should go through the process of maybe a prop firm and learn a little bit more about it, see how you go, and then decide whether you want to take your hard-earned cash and risk it all on the market. Do I really want to do that? Do I want to risk it? And it'll give you more insight. So I've warmed up to them, and I'm in agreement with them now. Let's put it that way. I agree that they're a necessary evil and something that we can use in our trading. And yeah, so it's Tuesday. It's December. It's the end of the year. Can you believe how fast this year has gone? I can hardly believe how far this year has gone. It's incredible. Yeah, I can hardly believe it. Well, if you're serious about becoming a seasoned good trader, then subscribe now. Don't forget to like this video. And on that note, I'm actually going to have to be on my way now. I want to thank you all for being here. Don't forget, for those of you who are not members yet, it supports the channel and buys me coffee and that sort of thing. So go and do that as well. You get Trade of the Day every day and a few other nice little perks. Thanks for being here, guys. On that note, I want you guys to make lots and lots of money and enjoy the rest of your day. And I'll see you back here on Thursday. And for those members, every morning. Guys, thanks for watching. Till the next one. Cheers. Ciao. And arrivederci. Bye.